G'day and welcome to the Investor Motivation Podcast. My name's Rob Gowdy and joining me today, as usual.
Yes, Rachel Todman. How you going, Rob?
Well, thank you. We're doing our new series where we're diving in, having a look at a few businesses that we know and love. We probably won't be doing any businesses that we don't like, that we're not interested in.
Yeah, that's right. But some that are topical, then nothing's off limits. So
okay, So today is another business that we do like and have been guilty of purchasing in the past. It's a family-run business, obviously listed, so we all get access to it as investors if we choose.
Yes.
Who is it? So
today we are talking about Reece Limited. So code for that's REH.
Okie doke.
Yeah.
Cool. What's the background? What do they do?
So plumbing, heating and cooling.
They do the plumbing or
supply the plumbing, I should say. So heating and cooling, waterworks. They're a global leader in that space.
Right. So global leader. So it's an Australian business, ran out of Melbourne, but obviously they've got some other spots by the sounds of that.
So they've branched out Australia, New Zealand, and also in more recent years the US. So
right. Okay. Give us a bit of background on more recent years. How did they get themselves over to the US?
So back in 2018, they joined another business that was over there and established, and they've now got close to around 250 stores in the US.
Wow.
So they've certainly come a long way with that, and they're expanding as well as they're going along. So
right. So they bought an existing business and are then now adding further stores over there as well.
Yeah.
And we had some numbers on the store growth, did we? I think we had that somewhere.
Yeah, there was somewhere.
So there was around, obviously, we can see...
900 branches across
900
the board.
branches, 9,000 employees, so this is no small show. What's the market cap, Rach?
So it's about 13 billion.
Right.
14.8 billion market cap.
So big business.
Yeah.
Now, what is interesting about this business is that it's massive, but it's predominantly owned by one family group.
Yeah, which we'll have a look at further. But
fantastic. All right, let's find that if we can find it, whether we wrote that down or not. But store growth is that reinvestment back into a business is something that we absolutely love. And looking at the network here, yes, they are reinvest. So here in New Zealand, they refurbished 15 refurbishments, so bringing their stores up to scratch and more modern. 10 relocations and net 10 new stores over the last 12 months. So that is good. And 15 new branches in the US. So this is that reinvestment that as investment advisors, when we're assessing businesses, we just love that.
Yeah, absolutely. That's what we want to see. Definitely to get that growth.
Very good. Now, I've gone off track completely.
That's okay. We go rogue every now and then.
We do go rogue, but obviously we've chatted about what they do. It's plumbing supplies. You had a friend that actually worked for them at one stage, and one thing that I really strangely do, and I used to do this to my daughters, that when we'd go into Smiggle or we'd go to Peter Alexander, I'd be the pretty strange dad would walk up. And I've done it at Lululemon as well as other numerous stores, is to say, well, hey, what's it like working for this business?
Yeah.
And I think it's important to know that employees are well looked after and people are kind to them, and there they get loyalty. You had some feedback on Reece.
Yeah, so he's still in the plumbing industry now, but 15 years ago, so quite some time ago, he was managing a store in Queensland, the Reece store there. And he has still to this day has great positive things to say about them.
Fantastic.
Ahead of their time. He believes in still with the technology and systems that they use, but also they look after their employees.
Great.
Which
That's exactly what you want to hear again. People looked after. There's a good culture, and if you've got a good culture, obviously people come and go for whatever reason, but likely people to stay if they're looked after. Yeah,
and to still talk about it 15 years later, then
it's
a good impact.
Yeah, and obviously this business has been going for over
100 years.
Wow, that's really impressive.
Yeah.
I was just looking here, tapware, it is toilets, basins. No doubt it would be downpipes, all the PVC plumbing,
Yeah, roofing, all that kind of
all
stuff.
the above.
Yeah,
Yes.
yeah.
Yep. And looking at roofing, valves, toilets, tapware, and wastes, pipes, fittings, valves, sewer, drainage. So this would be, it'd be at the, I suppose, at the small end of town, but potentially they would supply commercials and big commercial job, government jobs as well. So they would be across the breadth of that. So we always, obviously, we have 8 areas that we like to look at, but one of them is an economic moat. Do these guys have an economic moat at all?
Well, so economic moat means their competitive advantage. When we look at the reports, it's saying that they have a narrow or no economic moat.
Right. So anyone can come in and sell a pipe or a valve or a toilet.
Yeah.
Yes.
Yeah.
Yep. Understand. So not a huge. So they've got to get their competitive advantages in different ways, which is one, culture,
Yes.
pricing, buying power,
and expanding.
Yes.
Where they can.
Yep. And where that growth is obviously. A good name, and as they grow, that increases their buying power, gives them more negotiation when they're sitting at the table. Yep. Now,
100%.
let's have a look at what's happened in, obviously, past performance over the last year. What's it done, Rach?
Yeah, so 29% over the last year. If we go back a bit further, which we're always more interested in, 5 years it's 123%.
Yep.
10 years 252%, and then over a 10-year period 243%. So
Right. Okay.
yeah, some great growth there.
Good. And if you invested 10 grand in November 14, so we go back as far as the data will let us, it's now worth around 35, nearly $36,000. So a very acceptable return, and that is only over a 10-year time frame.
That's right. Yeah.
So, and that is the growth only. So in terms of future revenue and obviously earnings per share growth, we're looking at around 13.5 in terms of in growing profitability, and in the past it's been around that 8.5, 9% growth. So quite adequate. What about the balance sheet, Rach? We are very keen, and that's why it's one of the 8 that you've got to have a decent balance sheet.
Yeah, absolutely. With anything in life, you need a good balance sheet, don't you?
So you're referring to the home as well, aren't you?
As well, yeah, that's right.
Yep.
So if we look to the debt to equity ratio, so that's currently around 22%.
Cool.
So anything under 40% we're comfortable with. So they're well below that.
Yep.
When we took a look back, or you actually found the figures from their debt to equity ratio back in 2018, it was at 86.3%. So if we were looking at it then, no doubt we would have had a bit of shock on our face, but as we understand what they were doing at the time,
and that was
it makes sense.
That was the US.
Yeah.
The US transaction.
Yeah. So entering into Reece in the United States. So
So whilst there might be some high numbers of debt at some stage, it's really important to look through and see, well, why was the debt there? What did they do with it? And obviously that has already been paying off for them quite well.
Yeah.
The interest cover of the debt, the interest cover ratio is looking at how many times their profit can pay off the interest component on the debt. That is 7.3 times, which is well over the preferred 4 times. So pretty comfortable with that. Excellent. So that is good news.
Yeah.
Looks good.
Next one, dividends.
Yeah. Now there's 2 ratios here. One is my least favourite ratio. This is the dividend ratio. What is the percentage, the dividend, so the dividend yield? What is the dividend yield that these guys provide? And this is my worst ratio. That is, Rach?
So their one is 1.1%.
Yep. So when we compare that to a term deposit, that is horrendous. Why are we investing there? We then say, because I'm not a fan of the dividend yield as a standalone ratio to get excited about. Most retired men get excited about, I've got to have a good dividend yield. I argue this point that you actually just need a good quality business.
Yeah.
So the dividend yield is low, but the payout ratio is low as well.
Yeah.
So-
So it's sitting at 40%, which is a healthy number. So essentially that means for every dollar that they make, they'll pay 40 cents out, and then they're keeping the remaining 60 cents to reinvest back into the business, which is where we see that growth with US purchases and branching out. So
Yep, refurbishments, looking
Yeah.
after people,
Yeah,
technology,
yeah.
and so on. So I see dividend yield as just a completely arbitrary calculation. What I like to see is the actual dollar amount of that dividend growing each year. That is more important than an arbitrary calculation to give you a percentage.
Yeah.
So that's why it's not my most favourite. What's next, Rach?
We'll go on to what the analysts are saying.
Cool. So can you explain what you mean by the analysts? Who are these people?
So these are fund managers essentially. So they're watching businesses all the time.
So fund managers, stockbrokers, analysts within the investment community that their job is to
watch.
is to look through,
Yeah.
understand the balance sheet, and find out what a business is doing. So
Yeah.
and then they come out with the research,
Yes.
and that's what we're looking at here.
Yeah, and we've got a very colourful array of thoughts on this one, so which is good compared to the
Yeah.
other businesses we've been looking at.
So what do you mean by that, Rach?
So there's a couple that are a strong buy, but there's a lot that are saying it's either hold or a sell as
Okay.
well. So there's quite variation of what they're thinking.
Yeah. So for the first time, we're probably seeing people saying that it's more so. There's 3 that's saying it's going to underperform. It's not even a hold, and 5 saying underperform, and 3 saying it's actually a sell, that they wouldn't own it.
Yeah.
Now that might be because of the valuation, perhaps.
Yeah, potentially.
Yep.
Yeah.
And with regards to the valuation, the analysts also provide their thoughts on what a share is worth.
Yeah, so current share price as of today is around $24, and they're sitting at the average price should be around close to 22, and the low end would be $19.50. So
Right, yeah. And so that's where the analysts have come out and have said, well, their price target in 12 months they believe is X. So there'll be someone at the high end, someone at the low end, and they get the average between the two. And based on that average, it's probably $3 above where the average is, and that's probably where, in the short term, the sells and the underperform possibly come from.
Yeah.
We need to be mindful, and of course this is all general advice, that a lot of these opinions are not taking a 5 and 10 year view
yeah,
on
that's right.
on
They're
a
in the
business
moment.
that's been running for 100 years.
Yeah.
So sometimes this data can be not as long-term thinking as we would like as investors and shareholders of businesses.
Yeah.
Yeah.
And not that long, I suppose, in the last 12 months, their executive director, so we'll go into ownership in a second, but
Yep.
he purchased $19 million worth of shares at $18.83. So whether or not they're utilising those statistics, to
Yep.
find their pricing as well, so what they're
Fantastic.
prepared to pay.
So when it looks at look at the ownership of it, this one is for a big business, and this is quite abnormal to see this, but there is private companies, which is mostly the Wilson family, and they're sitting around 54%, and
Yeah.
then individual insiders, the people, are sitting around 30%. So these guys own 80% of this thing.
Yeah,
It
which
is-
is huge.
Absolutely monstrous, and when you look down the list, there is, the L.W. Wilson Proprietary Limited, that is 24%. Then Peter Wilson owns 18.6%, and then the LTW Holdings, which we could probably assume is another.
And same with the company underneath there, the Warramunda, that's affiliated with them as
Is
well.
it?
I looked a bit deeper. So
Very good. Thank you for looking a bit deeper, and so you can see that the internal ownership is massive in this business.
Yeah.
And these people, the Wilson family, I think based in in Melbourne, my apologies, have a huge passion for running their business, as generations before them have done. It's just like Hague's, isn't it? Just not as delicious.
Yeah, that's right. Not even close.
Yeah, not even close.
Now you found latest news or announcements. What have you got for us there?
Well, yeah, this is part of that reinvestment, which I think everyone knows I love, and this is where they've, there's they bought a venture studio business. So this is a software-based business, called Shadowboxer, a web design agency, Southpaw. So it gives the capacity to build digital products that can help, essentially products that they can provide to the plumbers, their customers, to make their job more efficient. No doubt it would allow them to order stuff.
For sure.
But delivering efficiencies to their customers, which will just build rapport, and if that makes their life easier, then they're just not going to leave. And I think this is this reinvestment part that I absolutely love. They're saying this is they've got the Reece's 2030 vision, which is really all about innovation. Technology innovation are the key pillars driving the future for Reece. So it's not just about delivering the products, it's also about providing value, digital innovation, and no doubt they'll be thinking about their customers. In addition to their employees. Excellent. Fantastic. Well, thanks, Rach. I think that's enough on Reece. But hold on, we haven't quite got your thoughts on it, Rach. Are you a buy, are you a hold, or are you a sell? And let's just say that perhaps hold is sitting on the fence, and we shouldn't do that.
Here we go. But I'm not. I'm a hold, because I feel like that the price at the moment, I'd want to see it back off a little bit, especially given that it was bought at $18.83 by that. I feel a little bit anchored to that.
Yes. To the director transaction. So if Leslie Wilson
is prepared to pay $18.83
and he's not buying now. And the market has run by 29% in the last 12 months. And this is really happening with every business that we're chatting about at the moment. The share markets have torn away in the last 12 months. So we are sitting at all-time highs across markets, and also the businesses within the markets. So if you currently hold it, I would feel very comfortable having your money beside the Wilson family, who are running this business exceedingly well. Would I buy now? The answer is no. If I've owned it for a long time, have huge capital gains, would I sell? The answer is no. So for me, I am on the fence and just contradict myself completely, but I am a hold, and definitely when markets correct, retract, or whatever it looks like.
They'll be on my radar.
They're on the radar. Excellent.
100%.
Thanks, Rachel.
Thanks, Rob.
Excellent. Thanks for everyone listening in. Please remember, you can hit our website, and there are courses there around superannuation, mortgage stress. It is education, and there's lots of it there. No emails required. Just go and watch the videos. Definitely check out Rach. Where are you hanging out in terms of socials?
TikTok, Instagram. So it's generally under Rach Todman. Cool. What about you, Rob?
TikTok, Instagram. Our YouTube channel we just ticked over 700 videos. That is
incredible. Well done.
Well over 12 years of labour of love and hard yak there.
That you love,
done it for a long time. And so again, it is all educational. If anyone has any questions that they would like to ask us, topics, or a business you would like us to have a look at, both locally in Oz or internationally, we can do it all. Please let us know. We're happy to do it. Cheers. Cool. Thanks, Rach.
Thank you.
Cool. Thanks for joining. See ya.